Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Well, it's starting off on a firm note. I guess that's the best way to describe it. Let's get it up on the screen here. Let's see what we got here going. Let's move the fact check spreadsheet over. There it is, right there. There is the Swiss. You can see it's still firm. Dollar still being bought, and the only rationale I ever have at this point in time is that the real issue is flight to safety. In other words, you know that the Federal Reserve rules, controls, manipulates, whatever adjective you want to use. The one thing is very clear, and that is that the Federal Reserve is the leader to this world market at this point. And I still think that the noise, I try to interpret sometimes there's a key word there. I try to interpret the math, what it's trying to tell us. And the actions that we've seen, what we talked about over the last, I guess it's about the last 5-6 weeks, something like that, right around there, the last 5 or 6 weeks, what we talked about when it came to the inflation, the transitory. And then Mr. Bernanke I'm sorry, not Mr. Bernanke, it's Mr. Bernanke's policies. It's Mr. Powell's ship to sail at this point. And what Mr. Powell had said was basically it's transitory, don't worry, be happy, no problems, so forth and so on. And I think that's what we saw yesterday. This is exactly the target zone we talked about 4 or 5 weeks ago. We talked about towards the end of July. Here it is, July 20th. We're getting a flavor. Last week we saw that the inflation numbers are not pretty. We're seeing next month, I think that the markets have historically had problems going into August. When a market has a problem, it seems to start in August. And I think what we're seeing here is if we do not see the inflation numbers backing off, I think what you're going to see is more of what we saw yesterday, what we saw last week when I put out that big warning about the 500-point drop coming around the corner. That may have only gone to a lot of the floor people and some of the Dukascopy people that, the geriatric side of the floor people. But in the end result is that I think that's what we saw yesterday. And so that's where we are. So let's get rolling along. You can see this morning the Swiss is lifting up. And so that means the dollar is going up in value. And the Swiss is losing value. And that is where the marketplace is at the moment. Now, like I said, I think it has to do with flight to safety myself. I don't think they think King Dollar is that worthy, that it wants to be the best investment. I think it's the opposite. I think that they're just, they just noted it's a smart place to be. There's the markets are kind of confused. If there's massive inflation going on, which we are seeing in the numbers, why are interest rates dropping? I think that's what really, the one thing I did hear on the financial markets and read that I actually trusted was that fact. They were like a little confused how we see inflation numbers last week and at the same time we see really, really low interest rates. And so to me, an 800 or 900 point drop in the Dow is not exactly major noise. It's just that we've gotten used to low volatility. For the circumstances we're living in. I think that's the best way to describe it, is that there's really low volatility. You would think, I don't know, I had a conversation with Robin again today about it. Gold should at least be in the 3,000 area right now. How it's not is because the Federal Reserve, and I explained it to Robin again, all these manifestos, your incorporation manifestos for the pension funds and the hedge funds and the mutual funds and so forth have written into their manifesto, the disclosure statement, that if gold does something, because it has been the tool for thousands of years, gold is a place to run to, and that's why cryptos have gotten so much strength. No doubt, cryptos are getting beat up a little bit right now, but as long as the Federal Reserve is playing this game, then the cryptos are going to be a live and well entity as an equity to compete, because it is a supplement. It is a a tool, just like gold is, or silver. All right. Let's see, what do we got here? Let's see, let's remove that. First of all, let's put Chicago Quant a little bit clearer, right there. As you see, the white line is moving up. You know, the dashed line has been superseded. In this case here, 3 hinky ashy greens. Let me go over to Chicago Quant. Let's see, Dukascopy day week. Here it is on Forex. There we go. Come on. There we are. And there is the, you can see here, this is the Swiss. It's been in a buy now for, going on a 6th day. It's looking very firm in there. This was curious. We've seen so much. I think that's what's bothering me more than anything else. I see this everywhere. Say 7 out of 10 charts. I might be looking at 50 charts, and 7 out of 10, a good 70% of them, have these really strange weekly distortions going on, which says to me, money was thinking one thing, investing one way, and all of a sudden it realizes, oh, this is not working right. And that fits again into the scenario we talked about 5 and 6 weeks ago. We're going to see that volatility fear, or not volatility, the inflation fear start to kick out more and more, especially going into August, if we do not see it go away. In other words, if it doesn't go away, that no matter how much the Fed chair wants to tell us that it's transitory, don't worry, September it'll start to back off. If it doesn't start to back off by August, and that's what I've been saying in July, I said this in June. June will watch to see what July says. And if it doesn't say something good, like it's dropping, and it's not transitory, then don't worry, be happy, it's going to fade. And then August is going to be the next one. So if we don't see, again, August inflation numbers coming down, and if they're equal to or greater than the July and the Junes, then it could be, this could be really more noise than the Fed wants. Like I said, the manifestos, the disclosure statements put out by all these thousands of funds have to follow their manifesto or they'll get sued. So that they're forced to do something. Now they don't have to liquidate totally, but they have to definitely hedge. All right, done off of my soapbox. Now let's jump over to the euro. You see here's the euro. You see it slid back into the sell yesterday. It's weak here. And again, we see that same characteristic out of nowhere, and a nice long drive down, and a weekly sell of, 3, 4, 5, 6, going on a 7th week. From that noise, you can see that the white line going through the time manifold, and all of a sudden acting like strength. We'll see. We've already seen in some commodities where this occurred last week, where they're starting to fail. They did this. Commodities did this like a week ago. What happened? What shocked them over there was the delivery of old crop corn exploded to almost $7.50 from like $6.60, $6.70. Went to like $7.45 or something like that on the delivery day. It's kind of like that zero minus crude oil back about 6 months ago. Hey, Middle Age, how you doing? Can't see, Doc. Oh, I'm sorry. Matter of fact, what we can do too for you. Did you notice? I want to talk to you about the coffee. Yeah, I can't see, Doc. Coffee up big overnight at 164. I wanted to talk to you about that too. Yeah, let me throw that up there since not many people were asking questions. Let's give you what I was thinking about. Let's open that, and it's right there. I was fascinated by tag, backing off the way it did, but and jumping around today. But here you go. Take a look at here's coffee, and I was a little surprised the daily was showing the weakness here. It hasn't updated yet. I can't wait to see when this thing jumps. What today's opening looks like, because this is exactly what's going on right there in the commodities area. That little bounce off of the weekly, something I know you really focus in on. That must have been very comforting to see Monday morning. I'll wait for your statement back. I'm going to throw a tag up there real quick too. Now this is really wild with the tag. Oh, I need to make that green. There it is. I was a little surprised to see this action. We're seeing kind of firmness in the, like red wheat is lifting, white wheat is lifting, soybeans and corn kind of mixed, So it was screaming at me when it did the bounce off of the zero line. I thought, oh, okay, Middle Age is going to see that. I know. I saw it do that bounce, and I thought, I can't wait to talk to Middle Age about this in the webinar. I figured you'd be showing up at least, if not yesterday, today, you'd be showing up for that. That's what's good about having the Dukascopy webinar linked to our our website. This way, there's a lot of customers, a good slice of them seem to be currency traders, and they're trading through Dukascopy. Most of them out of this hemisphere, and mostly in the southern hemisphere, but or Canadian, one or the other, But yeah, I think that's kind of interesting. It really did surprise me too, the tags. So I just want to go over and check this out. Let me see what we got there. I can close. Which one do I want to close? Not that. Oh, yeah, it's open there already. Okay, so yeah, let's take a look at. See, there's soybeans. See, soybeans are trying to turn back up again, and they've been holding up in here. And you can see that's just a daily. And you can see the weekly. They're back into the weekly buy. All three are in the back of the weekly buy. That's why I was surprised about tags. And then corn, same situation. It closed in a weekly buy last week also. And then the wheat did the same exact thing, and that was in the long sell. I mean, that was really being pushed down. And then check out that's new crop, and they're really lifting that thing. That thing is in the $7 area a bushel now. And then you go over and you take a look at and that's SEP wheat, no less. And then you go and look at red wheat. Where's red wheat? The only thing we don't have on here is sugar. I think there's an ETF to sugar I have floating around, but let's see. There's the red wheat. There's September red wheat. And that's doing the same thing. Matter of fact, the strength in all of that is kind of impressive. So, yeah, I mean, it's interesting. The currencies are trying to do the same thing now. They're doing their bounce. And that's where I'm reading it from the commodities of last week. And a lot of these products, like, let's go to cable. Cable, doing the same thing. Not as strong, but it's been in the daily sell now, 3, 4, going on the 5th day. Been in a weekly sell, since the, since what was that, June, first week of June. So, it's interesting. The money is trying to find a place to run to. And I'd imagine, inflation is a scary number for any money manager that is over the age of, say, 50. They know better not to laugh at inflation. Because right now, a lot of people are not taking that inflation number too serious. And I think that's what yesterday was. I could see it in the numbers. I could see them trying to, last week I saw it in the math. They were trying to push on us. That 500-point drop was, I thought, totally key to the inflation situation. Now, the Federal Reserve has so much money, they can prop everything up as much as they want, Bob. Money managers are going to have to push some stuff out. Their disclosure statements / manifesto incorporation says they have to. They don't have to flatten out, but they have to hedge or sell something out. All right, let's jump over to Turkish lira. Um, you know, it's interesting to see how this thing just refuses to get into the buy. You know, it played up to the dotted line that we've been watching for months, and you know, here we have the dollar Turkish lira falling and confirming in the weekly sell. And for the, we showed this yesterday, and we always do now. We watch both the euro against the Turkish lira, but that's weeks into it now. And you know, I'm not sure how this really plays out. In other words, how do they become more valuable? Maybe is it literally, you know, people are just running anywhere at this point? Maybe money's coming home when they, you know, imagine if you were a Turkish investor and you're seeing inflation now. They've just gone through a horrendous amount of inflation over the last decade, the Aragon era, and maybe they're saying, oh, what the hell, we might as well be invested at home if we're going to have to put up with inflation. Maybe we've already seen it. Maybe we're leading. You know, money could be thinking that. Maybe that's why we see a little bit more firmness in the Turkish lira. Is money maybe coming back home thinking, well, if we got to put up with inflation, we might as well do it at home. At the same time, they may be thinking, hey, maybe we led this. You know, maybe we interpreted this inflation coming all along. Now the rest of the world is going to join in. All right, let's jump over to Canadian. Right there. So we see strength in this. I'm assuming we're going to be seeing weakness in gold, not gold, crude oil. And there's crude. About the same. They actually look inversely identical. You go back over to the Canadian dollar, and the whole move looks identical there. It's kind of funny that it does that type of stuff. All right. Let's see. What should we look at next? All right, usually what we do is we go roam through the crude oil and the gold and so forth. So why don't we do that? We just saw crude oil. Let's go take a look at gold, and we'll take a look at silver. Let's see. Let me see. There is gold. As we look around, you can see it's perking up a little bit. I mean, it should. I mean, hell, got inflation, and hence the reason why the Federal Reserve likes to knock it down. In those manifestos I was mentioning to Robin, in those disclosure statements I was mentioning to Robin no more than like an hour ago, they are written in there. If gold and silver start to take off, they're supposed to hedge. They're supposed to take, you know, they're supposed to do something. Inflation has been a part of all these funds. You know, in other words, unless it's a hedge fund that does long short, which is the one I had. You know, you don't have to write that stuff in there because, you know, we're just volatility trading. But when you're overnight investing, or you know, I mean overnight, you know, long-term investing more than overnight, one night, one day. But when you're a long-term investor for weeks, months, and years, you have to write those into your manifesto, or no one's going to put money in your account. So you see gold trying to lift up. Could be the funds just picking up a little bit while it's weak, and the Fed doesn't really care at the moment for a little bounce. Now, silver, look at that. This is probably only the most positive thing we can say over what was that, 3, 4, 5, 6, 7, 8, 9, going into a 10th week in a weekly sell. This is the most positive we've seen it. We'll see. You know, time will tell. Like I said, we've got about I guess about 4 more weeks. You know, when we started talking about this, it was 10 weeks. It was 6 weeks ago, and we're moving into that target zone now. The end of July, you know, the middle of August is going to be very insightful. on how nervous our marketplace is. That's about the best way to describe it too. It will be very insightful on how nervous our marketplace is. All right, let's take a look at platinum just for the sake of it, since we're in the metals complex. There's October, trading at 1066. Let me just throw it up on Dukascopy. Let's put gold up on Dukascopy again. Right here. Trading at 1824. You subtract the 2, you're talking about $760. We've been watching the spread go from 1,051, I think it was, down to 476 or 74, one or the other. Now it's bounced back up about 50%. We'll see how that holds up. See if things start to roll over. I see. Oh, Middle Age says waiting for both of the weekly quants in gold and silver, aren't we all? And you know who's going to stomp on that. The Fed's going to stomp on it. But maybe they're going to let it climb a little bit. In other words, let's put it this way: if inflation really does start to establish itself, and the genre is changed, and the Federal Reserve, Powell has made it very clear he wants to pretend that they are not doing what they're doing. He wants to pretend that all the time. So he may have to let gold and silver move a little bit. It might put a little pressure on the equity markets for a little bit. That type of thing. That would be the way I would see it. So right now, let's see. You can see here in platinum, this thing's been a weekly sell just like silver. 3, 4, 5, 6, 7, 8, 9, 10 weeks. It's a while, All right, I'd like to see platinum lift up. Platinum started this with silver. Normally, I think, matter of fact, the other contract, I think we were even a week further back. Let me see. Yeah. So I think 22. So I think the next one was 14 or 15. Okay, 15. And I think that was 0 and 0 minus 4. So this sells 11 weeks right there. So platinum was around the 1235, 1247. It settled at 1247.90 at the time. And what do we have on our fact check spreadsheet? It says 8. But what was it 2, 3, 4, 5, 6, 7, 8, 9, 10? Going on an 11th week. Let's fix that on the fact check. I think that's. I'm not sure why it has 8 on there, but let's just do that. Let's put the right number in there. 11. No, not 811. Let's see. Bink, bink, bink. There it is right there. Yeah, I'm waiting for the same thing to see. I think if we're going to see it, it's going to be going into not next week, the following week. And you can see we are starting to make the turn. Let's go over to gold again. You see we're making the turn right there. Same thing with silver. It's making the turn. So, it wouldn't surprise me if going into the first week of August, we find ourselves with a little green circle, the whole bit, or the last week of July. It could be just, it could be right around the corner. We'll see. All right. Where do we go? Let's go to ruble. Back to currencies. Oh, what we'll do this. We'll do the South African rand first. Right there. Zoom in as people are really trying to, they're trying to, he's under arrest, or he's There's a warrant out for his arrest, and that's what all that noise is down there. So, and obviously Zulus don't really care about that. You know, they've never been a big fan of the ANC, and so I'm sure it's definitely a street fight. And you can see right there, and then not counting that the ANC in power at the moment doesn't have any interest in Zuma, the old ANC. What a mix-up that is, huh? All right, there is the RAND, and you know you would think that this thing would be moving down more. I mean, you can see there's a little teeny little slope, but overall the issues are just looming, and you know 25,000 troops out on the street probably has things a little bit more freaky. Let's take a look at Ruble. Ruble popped up yesterday. I was kind of curious seeing that starting to join in with the weekly. You know, the weekly hasn't really gone anywhere once it went into the weekly. We haven't seen moves like this. We're trying today, and then all of a sudden we start to get that sell going on. Let's see. Middle Age says, I'm watching yen dollar for a long call position. Yeah, I hear you. So that would mean that basically you are, if it's going up, the dollar is going up. You're thinking that the dollar is going to even show more strength, more flight to safety, right? That's what you're thinking. Let's take a look at it. See how this is pushing into the sell out of nowhere? If this thing bounces off the zero line, that would be interesting, you know? See that bounce off the zero line. Well, the daily's, what is that? Oh yeah, the daily went into a sell there. Right there. And it had gone into the buy the day before for a pop. There's a loser, but then it made all and 3 times more the money that it gave up, so that's cool. Move that one. And that's the action we're seeing at the moment. Interesting. So you're thinking, Middle Age is thinking, okay, I'm watching the yen dollar pairs trade and become a long a call, which means basically that what happens is when this goes up, normally, doesn't the dollar, no, wait a minute. When this goes up, what's it, the dollar goes down? Going down, right, exactly. Okay, I see you wrote that on there too. So I had it misinterpreted. I'm not really comfortable with the idea that they can get the dollar down. I just really believe that there's too many weak governments. I really do. I think that there's so much debt and so much disorganization that money is going to run to the dollar. It's going to do that same odd thing that it does when it shouldn't. Right, dollar going down. See, when this is going up, the dollar is going down. You can see this was. Let's show you a good example of that. We're going to throw yen on the Dukascopy, and then we're going to put the dollar index, or vice versa. We can do that too. Why don't we put the dollar index on Dukascopy? There it is, right there. So you can see here. Let's see. Where's this at? Gonna move this up a little bit more, like that, so we can try to watch the two of them. So here is May, and then here is let's see, there is, let's tighten this up a little bit, and there is May right here. And as the dollar index rose, yeah, see, that's what I thought. I thought that the dollar index, when the dollar index rises, the yen goes up in value, doesn't it? I'm not up in value, it goes up. So in other words, it loses value, right? That's the way I always see it. Right. So when they both go, normally, if we go back and look at like more historical, let's tighten this one up of like say the last year or so, something like that, or at least half a year. There's February. Okay, so there's the year. You can see February right there, right? And then on Dukascopy, let's move this over a little bit more like so, and do the same thing. And so there is March, there's February. So there's the February right there, right? There's the February. And so as the dollar's going up in value against the other pairs trades, same thing happens to the yen. The yen loses value and it goes up. There's like more yen to the dollar. And then it topped out. I guess you could say it topped out in April. And then we look at it in April, which is like right there. And that's like the end of March, the beginning of April, right? Right. Is that right? Yeah. So that's pretty much it, tops out. And so you see the dollar go down in value, and you see the yen go down, but at the same time the yen is gaining in price because now there are less yen to the dollar. And then you can see here where it does this hesitation where we're getting some really strange action. We bottom here in, what is that, like there's May right there. So we bottom like the last week of April. And there's May, right? You can see it tries to follow it and all of a sudden loses its ability right there. Now remember, at one point, right around that area, I believe, the Bank of Japan started paying interest on their currency. Remember that, traders? So they started paying interest on they moved away from zero interest. Okay? So now you have a bottom here in June, right? Late May, June. And this is going up, so it's losing in value. And what are we seeing over here in the yen? May. It starts off and keeps on going. So that noise we saw in this area, just right here, was probably the shift of the Bank of Japan's leaving zero interest rates and actually paying something. And now you can see here, the dollar was backing off, and then you see here, this is rising still, which is a little odd. Normally, if it was backing off, normally this would back off too. But so there's a little confusion there. But normally that's the way it usually works. It's like instead of buying a call in the dollar index, you buy a call in the yen. And it's kind of like an offset. It's like a pairs offset, or you do a binary or a call, whatever your choice is. And so to me, I just do like artificial binaries. I like to do call spreads and put spreads. So. There's a bullish pattern developing on the SEP yen futures chart. I'm now waiting on the weekly quant. Yep, I hear you. So you're waiting for the weekly quant to see. There's a bullish pattern. So the weekly quant to close in the yen. You're waiting for that right here. And so we've already pressed it once. You see, last time it did it, it broke off. It was a good little bet, good trade. But then what's curious is that look how it changed. I think there's a different dynamic, affecting the offset of the two. The Bank of Japan is doing some stuff for the better, at least in my mind. I call it for the better. Like paying a little interest, actually following in the rules of inflation and finance and so forth. So, yeah, I hear you there. Well, it's an interest, due to the fact that you do things in options, be it binary or just flat out options, it's safer to jump the gun, I guess you could say, the moment it confirms, you don't have to worry too much about being right or wrong because you already know what your risk is. Whereas when you're trading hard delta, you're just trading the spot or the futures contract, you get a little bit, I like trading the hard delta on a very short-term basis, and I use longer-term trades as the options. or use options with the spot or the futures, one or the other. In other words, if you combine the binaries and the options to the hard delta, it's a lot better and easier, and vice versa. So, alrighty, let's see. And what else shall we look at there? Let's see, where do we go? Let's take a look at, we've looked at the yen, and we start off with the Swiss. We've looked at the Canadian. Mexican peso. Let's check out the Mexican peso. We've looked at the South African rand. And there's the peso. Peso's I thought they were going to try to take off like this again. But look at this action. It gets into a weekly buy. Did it even get into the weekly buy? Yeah, it did. It got into the weekly buy last week for one week, and one day. Let's put it just like that. And now it's already cleanly heading south again. Right there. Oop, cancel. There we are. So it's already pressing in, and look at the daily. The daily is holding up. This is that distortion that I'm seeing at a lot of places. That definitely has me watching. I'm watching. There's no doubt about it. That distortion is definitely there. It tells me, I've seen this before, it tells me that that longer term money has all of a sudden started to shift. That's what I was warning somebody over the weekend about. I'm seeing warnings. I saw it in the grains last week, and I'm seeing it in the currencies last week, and now I'm seeing it, we're starting to see it in the stock market. You want to see something odd? Look at this. Over here in the stock market, you can see, here's the NASDAQ. NASDAQ, moving back down into the weekly sell with the daily sell, which is kind of cool. And then you got the S&P 500 ripping up even more now. And then you go over to the Dow Jones Industrial Average, and it's like a moonshot. Matter of fact, moonshot. Then they must have, the rocket, Jeff Bezos' Blue Horizon should have launched already. And so, and they're not wearing spacesuits, and it's automated. They're not flying it either. It's just all being automated. It's all automated. So they're taking their spaceship. No, it's like Star Trek. They're wearing uniforms, and the ship is being told what to do, and it does it on its own. No Sulus. Nobody really controlling too much. And so you can see, or is it Galaxy Quest? Where the second command tells the ship to do things. But you can see here, look at that spike. That's wild stuff. And then let's go down to the Russell 2000, which was the real warning signal I saw, and that was it had gone in a weekly sell right up in here, up in the 23, 24 area at the all-time highs. After a couple of weeks of fluctuating in and out, and then went into the daily sell there, rode itself down on this little bump just for a day or two, I guess. Right there, gave the volatility signal, and then the next day, let's see, I don't think it made it into the sell the next day, but it was in the weekly sell. So let's put it this way, you wouldn't be long, that's for sure. So that is that. For a day you waited, and then they give you all the winner chicken dinners you want right there. Quiet day again. Monday was quiet too. I think there are people out there getting a little bit nervous and a little bit confused. They may be standing back. They may have gotten beat up a little bit. Not everybody watches Doc's Mathematics here at watches Dukascopy to see what Doc's Math is doing, or vice versa. Not everybody subscribes to the Chicago Quant or looks into the Chicago Quant. And so if you're not tuning into Dukascopy and taking a look at Doc's Math once a day, you are missing the boat. Because we are probably one of the more accurate prognosticators, electronic newsletter writers in the marketplace in history. So, Let me think what else we got going on there. All right, so that is the what caught my eye. And then when we go back to the currencies, the Mexican peso, I thought we'd see a little bounce, but I thought it was going to start right around here, especially because of this weekly buy. And maybe it'll clean this up. Maybe, money is shifting gears again. I think money is. I think longer term money is making some shifts. And that's the classic of July and August. That's usually what happens. It gets that way. Matter of fact, you should see what the Dow Jones Industrial Average, which was up 100 points. Let me put it up there. Here's the Dow Jones Industrial Average on a very short-term chart that I used to trade with. No more than here's the London Open right here. They run it up from the New York close, right? So Asia buys, thinking buy on the dips. London opens up. Here's London and Swiss and Frankfurt and Europe in general, Milan and all that. And you can see they go, wow, let's see, how much is it? Let's just let me just jump over just real quick. So last night, where's that? Right there. The Dow Jones Industrial Average settled at, where did it settle last night? Right there. So it settled at 33,917. Right now, the futures contract is trading right under. It's already in the minus. How about that? It's already in the minus. So it's minus to it already. Now we go over to the intraday. Where's that intraday again? Right there. And you can see they've brought it down below. That's probably there. The 19 close was like right around in here. Then going into the Asian market, it lifted. You see right there. And now we are pretty much unchanged. Now you can see where they put the settlement because of the black pools and all that other stuff. It says it's up plus 65. So, but we noted from the New York close, it's actually down now. And it was as high as almost 34,200. Was it? No, 34,137. So we are now from the high to the low, just since the European Open, we've gone from 34,135 to 39,04. That's 300 points down. Oh, I'm sorry. Sorry about that. Thank you. Let's fix that. Yeah, so look at that. That's what's going on there. Yeah, oh sure. Let's look at that. And there is, and let's show you the short term and how that acted too, the same way. And there is the European Open right there. If we scrunch it up or move it over, you can see they did the same exact thing, ran it up, and now they are knocking it down. Let's just widen that out. Now this is a 639 contract trade, and they've put a little bounce into it, but there's like I said, I really do think that the inflation fear gains strength every day since June, and this is the target zone. We talked about it weeks ago, months ago now. That late July, early August is going to be more noisier, and we're getting it. There's no doubt about that. Now here they're trying to, this is the world index basically, the S&P 500, because 49.7% of the stocks in the S&P 500 are incorporated outside the United States, so they're not American companies. And the other 50.2 or 53, it's something like that. It's very close. It's almost 50-50. Are incorporated. So the S&P 500 is truly a global index. It really is. And so we're seeing that little bounce going on there. When the I'm running a what is this? This is the gas. The bottom one is a gas, so it's a standard. It's the competition to. I created that to compete with John Bollinger when we used to do the webinar. I used to be interviewed on his webinar. Let's put that up there. Add. And let's put Bollinger Band up on the actual product itself. And right there. And properties, let's put it up there. Good. There we go. So you see, when mine contracts and his contract, it's usually indicative, especially mine's more emphasized. You can see a much greater distortion than his. He's using a 1% standard deviation against the product. I'm using a 1% standard deviation against my mathematical formula, the one that defines the weekly signal and so forth. And so you can see here, it's riding the red line, and you can see ours just goes into the 0 line. And any little pop here off of his bounces off. You see how it bounces off ours. In this case here, we're following the green line. It gets through the time manifold, goes up and hits the 0 line there. There's the 0 line, and then backs off and breaks down again. So if if you're using the Bollingers, you would really enjoy the gas, not the gas line, but the gas. Now they're identical. Now what the gas line does is it makes it multi-dimensional, where it pierces back and forth. And so when you're watching the green on both of them, you're watching how it hits the time manifold. And when it pierces and goes up beyond the time manifold to the second standard deviation on the gas manifold itself. So it's using two manifolds, two time manifolds. And we're using a 1 standard deviation and a 2 standard deviation on the 2 time manifolds. And on the gas line, that's what's going on between the white line and the histogram. One is a 1 standard deviation and one is a 2 standard deviation of the math. That's what that is. And so lately I've been using both for the fun of it, because you can see here when it hits the upper 2%, you can see there is problems and issues. It takes a couple days for John's work to tune in, catch it. Mine catches it a couple days earlier. Another one is perfectly right there. Matter of fact, not only that, it blows through the line. Well, we want to call that overbought or what? That's definitely overbought. And then when it breaks down and starts breaking these, you get this action here. So that's the explanation of what's going on, the difference between gas line and gas. And so that's because gas line is one nonlinear time manifold, and gas is 2 non-time linear manifolds. One is a 1 standard deviation, the other one is a 2 standard deviation. So, not sure who took from who. Just say that it's John Bollinger's indicator up there, and this one's Doc's, that's all. So John's got his, and I got mine. I remember when, I think I was mentioning it yesterday or day before, where he tried to hook me up with Nissan up at Merrill Lynch when he left Japan and came to take over head of Merrill Lynch's technical analysis. I was walking to the World Trade Center 5 where the Merrill Lynch headquarters was, and I thought to myself, why the hell am I even here? I don't need to talk to your son. I was doing John a favor at the time, so I did. I went up and talked to him, but I didn't. I did not show him my math. I didn't even explain to him what was going on. I was like, why am I telling Merrill Lynch my math? Don't tell John my math. Why am I telling Merrill Lynch? So just the fact that they invited me into their inter sanctum, I thought, oh, okay, yeah, I'm sure they don't invite many people to see, the head of technical analysis, their office and their private office, and show you their work. So I thought, yeah, I'll go up and take a look. What's that, middle-aged? You like yeah, I don't think I've ever really explained the gas two manifold process versus the 1 gas line manifold process. Here, I'll show you something else with that, and then you'll understand it even more. Because you ready for this? Check this out. Let's make it, what should we make it? Let's make it red. Okay. Make it dashed too, like that. There you go. See, what it really is, it's just a mirror image of the other line. Let's contract it down a little bit. See, they're identical. The white line and the red, they're identical. Just one is plus, one is minus. Then when the white line goes plus, the market goes up. When the white line goes minus, it goes down. And the same thing happens with the mirror image of it. Obviously, when it goes up, the market goes down. That's why I make it invisible, so you don't have to see it. There you go. So that's the difference between the two. I actually enjoy. It's hard. You know how I always say I like to go with the KISS theory, keep it simple, stupid, and I am stupid. Okay, I like to be able to look at a chart and see, okay, when it's going through the zero line, I want to be bullish. When it's going minus to the zero line, I want to be short, or out of it. On the gas two-time manifold system, you have to think a little bit harder, because you're watching the green line go through and bounce around like this. Here's a good example right here. Let's bring this down. You can see right here, let's bring this one up a little bit like that. And just move that up a little bit, I guess like that. There we are. You can see right here, when the green line starts to support the time manifold, the time manifolds act like the zero line. See, that's what's going on there. And so what happens is that the green line gets through the time manifold, and you know that there's strength coming, but it's becoming overbought. So you know you're running out of gas. That's why they're called gas lines, or gas. And so then it's running out of the gas, okay? And also combined with the word of Gauss, the mathematician Gauss. That's why I was kind of playing with both of them. So then what happens is it gets up and touches the blue time manifold. Oh yeah, baby. The chances of it going up more, forget about it. As they would say in North Jersey or New York City. That's a mob thing. Forget about it, huh? And so, so what you see here, when this thing actually jumps through that manifold, watch out below, baby. Watch out below. Because it's out of gas. There's no more gas left in that move. And the same thing here. And see this one? Where it actually pierced the blue. When it pierces the blue, look what happens. Where was it? Right there, right? The high. It generates the high. Is it there? Let me put a line in there. A day later is done, okay? Let's see, where is it? Let's put it up there. I think it's 2 days later on this one. And let's make it run all the way through. So you see here, the next day is the high. Okay, there's the next day. Now, the green line has broken down below. You just know, okay, so the next day it's a down day. All right, no red dot yet. But it's a down day. And you know that we are going down. And then, whee, it's like at the top of the roller coaster. Whee! Put your hands up in the air, you own your puts, put your put binaries on, and just ride that, baby. As we used to say out here in the farming world, ride her hard and put her to bed wet. We're talking about horses, guys and gals. We're talking about horses. We used to, back, no more than 60 years ago, they were using horses and donkeys and stuff like that around here. In the 30s, we started using gas tractors. They used to say, don't ride them hard and put them to bed wet. They get sick. That's what we used to say. So it might have some other connotations, but we're talking about horses and farming. And so that is so very clear when you use the gas time manifold. That's why when someone says, why you got that time manifold? It's because, damn, man, I'm telling you, it's even hotter. Like here's a good one. You can see here it breaks, right? And then what does it do? It goes and kisses it again. And then bang, 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 you're dead. Now this is an intraday, guys. This is an intraday we're looking at. And you can see same thing happened here a few minutes ago. We found a bottom. It broke the hard time manifold like it did right here. And sure enough, you get your buying. Now middle age uses it. Middle age uses it on the dailies. Matter of fact, you know what I might do before we? It's 28 after, but you know what? Let's do this. Middle age. Let's go take a look at. Let's minimize this, and let's go over to your coffee and take a look and see what it's doing to the coffee. How do you like that idea? How do you like that apple, huh? Let's do that. Let's insert it into that. What are we running? Well, we're running a gas 7, right? So let's see if we have a gas line 7 we're running. So let's see if we have a gas 7. I usually have both of everything. So there's a gas 5 right there. There's a gas 7. Style. Let's see what we can do here. So let's see. Look at that, all the time, man. All I have is on there is the one line. That's interesting. All right, so let's do this. Is that we'll make it the way I just showed you, with the dotted lines. And that's the second standard deviation. Here's the first, like that, and like that. I like the golden more. And then we got, this is our green, right? Green line. There we are. And we're not running any histogram at all. We'll go that as a default now. And then let's move this up. Whoa, there's your pop. Look at that. The pre-market, they popped it already. They're just, oh, I guess it's getting ready to open. So that's what that's doing there. Now, let's move this up just to take a look at what it's doing there. See, now, it made it through here, and which is interesting, is it kept on hugging this and coming back up. And then finally, I guess you could say, when it finally starts to break this, there's your weakness. Right there. Those days of weakness. Right there. And if we put the line through it, you know, right there, it's the day before the big drop. Yeah, see that? Right there. How do you like that? Huh? How do you like those apples? And you can see here it's dancing in the reverse direction now. Now, why don't we try this for fun? How about if I remove the gas 7? Let's take a look at the gas 5. You up for that? I mean, if anybody cares, if I'm going too long, say something. I'll check my my Skype. But I'm having too much fun. Let's see. Is anybody complaining that I'm running through this? No, I don't see anybody complaining. All right, let me just do another minute or two for the fun of it. You up for that, middle age? All right. Let's see. Which mouse is that again? There it is, right there. Let's see. Let's see. I'm gonna remove the 7. We'll take a look at the 5, and that's how that close. Let's try this one more time. Indicators. All right. Now let's move the. Oh, wait a minute. You know what that is too? That is. Let me just double check something here. That's the weekly, right? We didn't even look at it on a weekly basis. We're looking on a daily basis. Let's see what it is on a weekly basis. Maybe we don't need to go to the 5. Check this out. Is that right? Let's see how this looks. So let's move this up like that. Move this up like that. And then move this up like that. And there's your weekly doing the same bounce. And then the break was, yeah. So it caught this top action. See? Look at this, bring it over. See that? That's interesting. It was riding this all the way up. Wow. Then when it finally broke, it didn't even touch it. It was like it's like another 3-dimensional zero line. And then it breaks it here, and you get your weakness. And then, you know what, middle age? I bet you would be happy to have gas and gas line of both of those on a chart. And now let's go check out 5. Let's see what 5 looks like. But that's on the weekly. I was looking at it on a daily. Isn't that fun math? I love it. Let's see, where am I going here? Let's do this. Let's add. Let's just add one instead of removing it. Let's just add it. Indicator, gas 5, add. I'll tell you, some of the currency people should jump in on this and say, I want to see that on the currencies. I really, really do. Now, the difference between gases 5 and 3 and 7 is the beta. So, in many ways, let's shrink. Let's do this. We'll move that up like that. That's the gas 3 we're doing on a daily. And we'll shrink the rest of these guys up like that. And this, now you're looking at a gas 5. And I believe I have it set on the weekly. Yeah, it's set on the weekly now. So let's take a look and see what that does. Let's go back to the top. Did that. Now that's interesting. See, because of the beta in it, look at it, broke down there. It didn't break that until it broke the top here. When it breaks the second manifold, it was very clear that the 3 days later, 2 or 3 days later, it starts to bon voyage itself, because I guess it's like right there. This one right there is that day that it's minus. It finally breaks it after this pop, and then you get that sell-off. And it actually hits the manifold here. You can see now it does, it has that thing going on where it rallies again. And I think the 7 brings it back up. Let's take a look at the 7 on a weekly basis. I think the 7 picks up on that, does it? No, it doesn't. Oh, I guess it does. It doesn't break the goal. No, it does. It does the same thing. That's what that is. And then so the gas line, how's the gas line? Gas line, see, the gas line drags it out. Doesn't give you as much a warning. That's why I keep 2 of them on the charts. I like to watch both of them at the same time. Yeah. Well, it's a whole different concept of time. See, I have a better way of using math and time, or I have a better way of measuring objects moving. Remember, object moving is a delta t, all right, distance and time. I have a different time factor than the rest of the world. That's all. I use a different time factor. I invented it, again, I've said this many a time, to fight the Higgs boson. And so I invented it back in the 70s and then ran it on a very heavy, very good mainframe over in Hertfordshire. Out of the 4 major mainframes they had in England, I was able to use the one that was at the least prestigious school, and I had like 5 different passwords. So I had runtime, all I wanted. Anytime I wanted more runtime, if I'd gone to Oxford or Cambridge, they would have given me a bag of guff or the London School of Economics. They had the 3 mainframes, and the other one was Hatfield. So I went to Hatfield. All I wanted was runtime on a mainframe. So I got all the runtime I wanted. Every time you ran out of runtime, the computer science professor just gave you another password. I must have had 5 or 6 or 7 passwords. I just was running. There's no way Cambridge would have had too many people using that much time. They would have limited me. They would have made me have 1 password or 2 at best, But there at Hatfield, man, I had as much as I wanted. Matter of fact, I used a couple different people's passwords even. Anyway, forget about that. But that's it. Yeah, so I've been able to run this on some mainframes back in the 70s and get it running right and then use it in the real world, whereas everybody else likes to play Fantasyville. So anyway, I think I'm past my point here. All right, this is Doc from North America, having a lot of fun. You know what? We'll see what we can do about putting a 3rd line in here for you. I'll look to see which one's the best, and we'll have it on the coffee for you. All right, this is Doc from North America saying everybody have a nice and happy trading day. Arrivederci to all. Happy trails to you until we meet again. Happy trails to you, to all our cyber Dukascopy trading friends. Ta-ta for now.